This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to discuss the market trade, it was a busy week in the markets with elections, a WASDE report, inflation data, a lot of different items. As we look at the week in review, so to speak, we're joined by our good friend DuWayne Bosse of Bolt Marketing here today. DuWayne, good to catch up with you, buddy. How you doing?
Yeah, not too bad. It's been busy, harvest, and then we did some fall tillage work and some landscaping, adding gravel around a shop project here, and been busy. And all of a sudden, that just came to a halt this week for us. As we got a little bit of an ice storm up here in northeast South Dakota, and now it's cold, and it's going to stay that way for a while, which is kind of okay. So got me cemented back in the office doing maybe some of the jobs I was supposed to be doing while I was outside.
Well, I know that cold weather, it's going to make it tough for anyone to do anything outside. It could stress some livestock here the next couple of days. Hopefully it's not too bad. And, you mentioned you got ice. Folks up in North Dakota, I know the Bismarck, Mandan area, over a foot of snow, almost 2 feet of snow. So I thoughts and prayers with those folks up there digging out on, middle of November, DuWayne. It's not something that you want to see middle of November.
No, it kind of came out of nowhere too, didn't it? We just hot, dry, and all of a sudden it just flips. Just makes you realize that's Mother Nature's got a sense of humor. And it's interesting. We're really dry. You look at the drought monitor too, and I kind of thought we should be talking about drought for 23 a little bit. And sure enough, about a 2-week time frame with some rains across the Mississippi, and over here now some ice, snow. It all of a sudden feels like drought, something we can push back until April now again.
Yeah, I think that's something that's going to go on the back burner a little bit. We've had plenty of issues in front of the trade this past week, though, and as we look at Veterans Day trade on Friday, we kind of gained back what we lost in grains on Thursday. Soybeans, bean oil, the upside leader, the crude oil market kind of helping propel things higher. Quarter wheat had a decent day. Overall, though, just 1,000-foot view, what are your thoughts with Friday's trade action? I know there's a couple things out there with the dollar breaking and some news out of China, DuWayne.
Yeah, you're right. Overnight news out of China was that they're going to relax their COVID restrictions a little bit anyway. And when you read through them, they still look pretty restrictive to me. But of course, living in South Dakota, we didn't really lock down for anything. We kind of invented staying away from everyone out here. But anyway, I digress. Yeah, that was the news. So that drove the soybean market higher, thinking that China's economy is going to grow a little bit faster now than anticipated, and that should mean more demand for our commodities. Now, we also had a day on Thursday where the soybean market was down sharply as money left what I felt like was the corn, soybeans, and wheat market, going to the stock market with a lower CPI number that came out this week, so showing just a little bit tamer inflation than we anticipated. Still very high, but a little bit tamer. So money left on Thursday, money came back in today. That's my 1,000-foot view of this market.
Well, you brought up the CPI, and I thought that was very interesting to see those numbers on Thursday. We got U.S. consumer sentiment on Friday. That fell to its lowest since July with the University of Michigan reading. I'm just looking at that, 54.7. That was an 8.7% drop from the month prior. So, a lot of economic data, and we think about this market and maybe a break in the dollar if we can sustain this break. What could that do for the commodity markets, and what could it do for exports? I think that's something to watch, but especially this corn market. A good thought got thrown in my head here today. There's a lot of demand for corn domestically that might be making up for some of our exports that are lacking right now, DuWayne.
Yeah, you're right on all fronts there. Yeah, we got to remember when the U.S. economy struggles, it actually can be a pretty good time for ag. Because a lot of times, if our economy struggles, the U.S. dollar will actually go down. So as this recession rolls on, it's still going to hurt our pocketbook probably through 2023. But maybe in the futures market side of it, we've already seen the low in the Dow. Maybe we've seen the high in the dollar. So to your point about the dollar, if it's only a 2-day crash, but it's a hard 2-day crash, probably the hardest I've seen in a long time. The dollar is now trading to the lowest level we've seen since like August 20th or something like that. So if we can keep that going, then of course our commodities will be cheaper here for someone like a China to buy. So yes, our corn export demand has been lacking, but that might come back into play here if the US dollar drops back far enough. Yeah, a lot of people say we're about 60 cents above the market on corn, but remember USDA this week, they gave us a USDA report that showed stocks are still very tight. And I always look at that and kind of go, well, we can't export a whole lot of our corn. So if the dollar keeps going down low and say the corn market just goes sideways, well, we're getting cheaper out there for the rest of the world. We should be anyway, depending on foreign markets as well. But you mentioned, domestic demand. Domestic demand is still very good. Ethanol grind is going to be very good. They're profitable. They've got the bushels finally. We saw a big dip in ethanol production or usage, grind usage, I should say, the last couple of weeks. Honestly, Jesse, I think that's because we ran out of corn. We just didn't have the old crop supplies. So they finally have the new crop. Now I look for the grind to be very strong moving forward. So maybe we don't have to export a ton of the corn market this year and still have a tight situation. USDA also kind of came out with their baseline projection, which had an increase of about 4 million acres on corn, which I'm not going to disagree with. That's right where I have my estimate, 92 million next year. But to get there, Jesse, we need this drought that I joked about earlier to continue, because the only place that really comes from is prevent plant. And we had about 6.5 million acres from prevent plant this year. To gain 4 million of that back would mean that prevent plant would be near record low, which is possible, but we better be dry come spring.
Yeah, that's a great thought. And a little more thought with some of that domestic demand for corn and beans as well. We know crush margins are still great. A lot of that's being reflected in this strong cash basis right now, and it's different when you look at the futures board and you look at the cash basis. They tell two different stories right now, DuWayne.
Yeah, they do. You really got to look at your local cash, and more than likely your basis has improved enough that storing the corn and beans off the combine probably already paid for itself, actually, especially in the soybean market. That soybean crush you mentioned, that could be quite a bit stronger than what USDA is projecting right now. I guess I say quite a bit, 50, 100 million bushels, but 50, 100 million bushels when your ending stocks is 200, that is a lot more than we need right now. So I think it's very, very good moving forward. One of the nice things about diesel fuel ramping up so high to the $5 cost this fall was it did get more people talking about biodiesel a little bit more, and maybe grinding some more of that for that. And the veg oil market's very hot in the world. I think I read this morning that China is going to buy a bunch of veg oil from Indonesia, which, okay, that's a bummer. We missed out on it, but it just shows that that demand is out there. And that's really what I'm looking for. So, I think an ADM CEO said something about don't worry about soybean exports so much because we're going to just crush it all here. And that's great to hear that kind of domestic demand. Like you said, just same with the corn market. We have strong demand here. And now if the US dollar can dip back, and our prices should have very good support moving forward, knowing that we're going to export more then.
Now, DuWayne, I know we've talked about this, I think last time we talked, even. Has anything changed in your thought process talking to clients with their marketing plan, corn or beans? Just with, you mentioned, maybe some of that storage has already been paid for itself coming off the combine. I mean, as you look at some of the different events that have hit the trade now, we're through the November WASD, et cetera, the midterms. Has anything changed with your thought process in corn and beans on the marketing side?
I'm a little bit more nervous than I was last time. I think I had some pretty big bullhorns when I was talking to you last time. And I think the reason why is I'm sure I stressed that we need a weather scare in South America to really elevate, to really get the beans above $15 and $15.50, which is kind of my make-believe target up there, I guess, to where I'd like to sell my own beans. But that weather just isn't happening in South America. So my bullhorns are getting trimmed down just a little bit. But it's nice to see that the basis improved so much that, storing things did look like it was the right move. So I guess I'd say I'm okay with someone selling beans here. The basis is improved. There's not a weather problem right now in South America. And if there becomes one, we could always buy it back on the board. The corn market, I feel like, what I've been telling guys is it's one of two game plans. If you're nervous and you were going to sell between now and the end of the year, you probably just find a short-term pop and just sell it, because I don't think you're going to get that big grind. If you can store it till next spring and manage that risk a little bit with some options here or there on bad times, I think, I hinted at the spring, you could see a nice weather market rally if we have any problems in the U.S. as far as getting that 92 million acres of corn planted. So, I've changed a little bit. I'm not crazy bullish, and the market is just entering kind of a little bit of a boring time frame. Forgive me for saying, but we don't have a lot of news right now hitting the market. So we didn't get the big rally to 730 like I wanted for corn, and I don't know if we're going to get it till next spring now.
DuWayne Bosse, Bolt Marketing, is our guest today here on A Market Talk. DuWayne, I know, we were talking as well, and you mentioned this, it's kind of getting to that boring time of year, so to speak. In the markets, it's holiday season. A lot of traders are just kind of, we're just going with it until the end of the year, so to speak. It feels to me that probably the two big items in front of the trade, I'll say three, that could have any sort of major impact in the next 6 weeks is going to be the Russia-Ukraine grain deal, the potential of a rail strike, and South American weather. Out of those three, what do you watch? What are you watching more closely? What are you worried about the most out of those three in this market?
Actually, it's the railroad strike is what I'm most worried about. But let me take the Russia-Ukraine thing first and just give you my guess of what I think happens. Next, Saturday is the 19th. That's when the current grain deal expires. I think early next week, you're going to see Putin mention a few things, try to get some leverage, like we're going to shut it down type talk, because he wants one of their large banks to have all the sanctions dropped on them. But when it comes to reality, at the end of the week, I think that export corridor will stay open, and probably will stay open unless some sort of war thing happens where a ship gets sunk or something. I think it might get extended for that year that Turkey wants. So that'll probably be bearish the wheat market, and should be the corn market a little bit at the end of the week after a bullish push early. But it is a war. Putin gets backed into a corner. You never know what happens there. South American weather, we'll definitely keep an eye on that. But I got to remember and remind myself, we can trade that too. If it starts to get dry, we can buy bushels back with call options, straight futures. So if somebody wants to sell because they got a tight basis, that's okay. And what was the other point? I can't even remember what that was now.
It was the rail strike. It was that rail strike.
The one that I'm worried about the most. Yeah.
Yeah, we kicked the can down the track, so to speak, on that here for a couple of weeks, but that's not going away anytime soon, it doesn't feel like.
We did. You're right. They got to an agreement that and thank goodness the railroad workers will continue to work while negotiations keep going on. And this is a touchy subject, not just for us in ag, which is very touchy there, but just the whole U.S. economy, basically. We just can't afford a rail strike right now. I talked to our fertilizer guy, asked him if, the low Mississippi levels, is that going to have an effect getting fertilizer all the way up here next spring? He said, not really. He said, what they'll do is they'll just use rail to get it up here. Costs will increase about $5 a ton, which when it's this high price, you don't even notice $5 a ton. Mm-hmm. But there you go. He just mentioned railroad, right? So if there's a railroad strike and that shuts down, well, then I don't know how we get fertilizer up here. So that's very concerning. I like to think that cooler heads will prevail and they'll get some sort of deal done, because there's just too much at stake if a strike happens.
I should ask as well, thinking about the midterms, it didn't feel like we had a huge impact when it was all said and done with the midterms on the markets, maybe the macros, the stock market a little bit. But, I know we're still trying to figure out who has control of Congress here still, but it feels like overall the midterms were kind of just came and went and didn't really have a huge impact.
I agree. Kind of came and went. I think, the CPI number was a bigger deal on the US dollar, which affects our commodities more than the election was this week. And it just kind of came and went, and almost kind of, I guess I wouldn't say disappointing, but it was just like, man, we look forward to elections so much, and it came and it didn't really change our viewpoints of commodities and really the control yet. We'll see. I'm just glad I don't live in Georgia and don't have to listen to all the political ads for the next couple months.
I agree with you. On that. One other quick note, wheat market, anything else you're seeing there that they're watching closely? I think we hit a few topics that definitely impact wheat, but anything you're watching there?
Looking at a chart, I feel like we could be making a U-shaped bottom here. It's oversold as well. So I could see some buying interest the first part of next week. But overall, after that, like I said, if that Ukrainian export corridor stays open like I expect it to, it's going to struggle to rally much. It's the wrong time of year for wheat to rally. But, again, the boring time of year, right? But come next spring, we got a problem with this winter wheat crop in the U.S. It's very poor conditions. And even the little bit of winter wheat that's around me, Jesse, up here, just didn't really germ. I mean, we planted it in dry dirt and nothing came. And now we finally got moisture right before we freeze up. So I think we're going to have a story there next spring.
Let's talk livestock, DuWayne. Cattle and hogs had a down day on Friday. I'd have to think a lot of that tied to the grain market moving higher. We saw a decent day in cattle Thursday, but you really look at all of these markets, live and feeder cattle and lean hogs, feels like we're just kind of chopping around still here as we enter holiday season. What are your thoughts in the protein sector?
Yeah, a really disappointing trade today in the cattle market. I really thought feeders were taking off yesterday, and now we've given all that back up here today. So does that lean to tell me that there's something different happening in the corn market, and the corn market is going to make that U-shaped bottom and go higher? That's one possibility. But I think the main thing on the cattle market is this futures market keeps trying to put a premium in the deferred contracts, quite a bit higher than the current cash, even though cash is good. I mean, 150, 151 fat cattle, that's great cash, but for April to get above 160, it just feels like a bit of a stretch right now. Every time we have a pop-up like we did on Thursday's market, it seems like we have to sell it back off because we're at too much of a premium. In the feeder market, it's the same way. The cash market is strong, and in my area, it's just white hot. Good luck buying the calves, especially the smaller ones. But the feeder index in general just can't get going away from that 175 level. So it feels like the January board at 178, 180, 81 yesterday was too high, and we had to pull it back again. Should have very good support in the cattle market moving forward, Jesse, because I think those cash markets do keep grinding higher, but slaughter for fat steers have been higher than I anticipated. I keep promising we're going to have less cattle, and it just doesn't seem to happen. Now, it should start to happen as we get in 23, but it's a slow process there. Still could be a booming market, but we need that recession talk to go away for next year. And we need some more rain. Some rain in Montana and the Southern Plains. Guys would look to build herds back, and they wouldn't feed those heifers. They'd buy them back to keep as replacements. That's when this market really finally takes off.
You made a comment in there as well that I have noticed quite a bit about the cash markets getting calves, how things are white hot in your area. I've heard it be white hot in a lot of places across the north, South Dakota, North Dakota, Iowa, even a lot of sale barns where there is some really white hot elevated pricing right now. And I find it just interesting we're seeing that compared to, we typically would see a lot of that, I feel like, in the southern feedlots.
Yeah, a couple of reasons maybe. This year with how feeding worked out, the fats aren't grading as well as they should. A lot of that had to do with, the drought in Montana pushing cattle out. But typically in the north, you get a little bit higher grade animal. And so maybe that's why we're paying more for the ones coming out of the north, is we're going to try to get that choice number a little bit higher because the spread between choice and select is quite wide right now. But yeah, it's white hot. I've got guys that are calling and asking me, what do you think of the market? And they listen and hear me talk about how I'm bullish. And then at the end of the conversation, we end up going, just load them up and sell them, because it's such a good cash market right now. I can't really protect it well on the board for them. And it's profits that they haven't seen before. So just let them go, and God forbid, keep some of that $6 corn, hopefully $7 corn, and sell it yourself. So guys are letting it go. But the funny thing is you think, well, then we'll have more supply and it goes down the price. Not so much yet. It's very few people doing that for now, but I don't blame anyone at all for going ahead and selling those calves.
The piggies, the hog market, just kind of chop it around, maybe some consolidation to wrap up the week there. Any thoughts in the pork side, DuWayne?
Yeah, mostly just a consolidation there, but a little worried about that market, Jesse. China I don't think is going to come in and buy it from us like we were hoping they would. They had very high prices here lately, but horrible exports this week for pork. So I'm a little worried there. When we talk about difference between futures and cash market, the lean hogs are actually at that premium to the cash. I think this is a case where the futures market has to go back down and meet that cash market, especially like the D's and Feb boards. I think we're going to grind lower, I'm afraid. So yeah, a little bearish there. On the other side of that, bird flu is running rampant in the North America again, and that keeps chicken, poultry prices very high. So domestic demand should stay good. So I'm bearish, but yet I don't look for the floor to completely fall out of that market.
Well, DuWayne, before we wrap it up, the floor is yours, sir. Any final thoughts you have for us on the show today?
Yeah, it's just a good time of year, as things get frozen up here, we can't do any work. So it's a good time to sit down and do those break evens, look at your marketing plans a little bit more like you and I have talked the last couple of times. Marketing plans have been a little bit tougher for me to do lately because usually I do them based off of profitability. Profitability has been just good and solid and pretty high lately, especially if you got the yield. But still, sit down and push the pencil anyway and decide which bushels you can risk on and look out to next year too a little bit. And yeah, call your brokers, talk about it a little bit, get a game plan this winter, and then try to stick with it.
Well, if folks want to reach out to you, get a little advice there at Bolt Marketing, what's the best way to do that, DuWayne?
Yeah, they can call us here directly, 605-448-2365. And they can always check us out at our website, which is boltmarketingllc.com.
DuWayne, thanks for the time, buddy. Enjoy your weekend and week ahead, and we'll talk to you again real soon.
Sounds good. Thanks, Jesse.
DuWayne Bosse, Bolt Marketing, our guest today here on Market Talk. That's going to do it for the show. Find us online, markettalkag.com. I'm Jesse Allen. Have a great weekend.